My name is Naresh Vyas. I work here at the Royal Bank of Scotland. We've been, probably as Jeremy talked about, the different flavors of blockchain. We're by and large in the enterprise space, typically around distributed ledger technologies. Quite different use cases, but what I'll do is talk a little bit about our journey in terms of the work we have done in blockchain. And then I'll also specifically cover, for me, what I think is some of the more exciting work that's happening in the future. So just a little bit about Royal Bank of Scotland that everyone may not be aware of. So we're a bank with multiple brands. So we typically are traded with the name NatWest in England and Wales. We have here up in Scotland, we have a high net worth business, Adam & Co. Coots down in England as well. A military brand, Holt. NatWest Markets, which I'll talk about a little bit more, is our investment bank. And then we've actually quite early in terms of getting engaged in distributed ledger technology. So NatWest Markets, we've invested in the Series A round of a company called R3. R3 is a consortium made up of well over 40 banks that have invested, and I think there's up to now 200. When we joined R3, we was a single digits in terms of the number of banks that were part of R3. So we were very early on investors in R3, and from our point of view, and I'll go through our basic principles, but from our point of view, we there's so much we could do on our own when it comes to distributed ledger technology. You actually need an ecosystem, and we felt that R3, with the size in terms of the number of institutions that are part of R3, and it's not only financial services institution right now. We have companies like Intel and technology companies. You also have insurance companies and other industries have joined R3. Part of the main product that's come out of R3 is a platform called Cordar. So Cordar is an open source distributed ledger platform that the banks can use. You can see terms like finance grade. There's some things that Cordar does that helps in terms of leveraging this technology. So things like producing reports, for example, comes out of the box. Things like some of the performance characteristics that we're looking for in terms of if you're using this for a payment application or managing large volumes of trade comes out of the box. So there's some benefits of the Cordar technology. We'll go through all of them. In terms of how we work, and this is just a illustration. We tend to, for these initiatives, and what R3 has sort of provided is an ability for multiple banks, and that's what we have in this picture, people from different banks actually working together to solve a particular problem in financial services, leveraging the technology. And typically the engagement on different initiatives are, 200 seems overwhelming, right? So normally we break it down into a particular problem set. I'll go through the different problem sets. And you have a handful of banks that are working together to solve that problem in a particular geography or particular use case, per se. So these are probably the four areas that we've focused on in terms of problems where we were looking at using distributed ledger technology. So one is around trade finance, and we've actually just announced 2 weeks ago at a CIBOS conference, which is the largest typically industry conference for financial services, over an initiative called Marco Polo around trade finance. So we have about 12 other banks along with RBS that are offering blockchain services, offering trade finance services via blockchain. I think blockchain is a very good technology around trade finance, where you have goods and that changes hands over different geographies, different borders, different entities, and you're able to track these goods through the ledger and are able to know exactly at any point in time where the products are. So it was a very good use case. Another one is processing post-transaction, post-trade processing. Again, a very good use case around distributed ledger technology. Payments is another case where I mentioned. So we've done something in demonstrated capability in the Republic of Ireland. So if people who are familiar with Ireland, you would know that there's no local payment clearing capability. So here in the UK, we probably have a half dozen BACS, faster payments, a bunch of different domestic clearing capabilities. In the Republic of Ireland, everything's cleared through the EU in Brussels. Whereas you look at the volumes, 98% of the payments are domestic, but yet everything has to go abroad to get cleared. So there's a good opportunity there with the Bank of Ireland to look for a modern solution in that space. So we've demonstrated a capability, and that's still being evaluated by regulators. And then lastly, digital currencies, right? So this is something that I'll go through our rules. So we don't have an appetite to deal with the current set of currencies like Bitcoins or things that are controlled by a relatively small number of people. But our interest in digital currencies is basically tokens that can hold value. So things like reward points that we issue customers, for example, could be done through in a distributed fashion through digital currencies. I think you should look at the technology, right? And again, it's early days, but you can see the maturity in the space of blockchain platforms, right? Distributed ledger technology platforms, and you're sort of seeing industry sort of moving towards more mature products, more mature capabilities. Towards the end, you should look at, for example, Hyperledger. Again, large number of institutions are members of Hyperledger, and by and large spearheaded by IBM. You have Corda that I talked about earlier, spearheaded by R3. You have the Ethereum Alliance, which is we are also a member of, and you see a lot of institutions spearheading that, and you're sort of seeing some flavors of that coming out. So I believe J.P. Morgan Chase has a version of Ethereum they call Quorum that is also taking Ethereum and tuning it to make it finance grade, and again the performance characteristics that would make sense for financial services. There we go. So here are some of the I guess rules that we follow, right? And they may seem obvious, but I think they're quite key. So first of all, if you can use a database, just use a database, right? The value, all too often we've seen people use blockchain, DLT, distributed ledger technologies to solve a problem that could easily be solved just using a database. So if it's a single party, that's why I say if it's an internal use case just within RBS, we'll just use a database. There's no point for us to get a really complex set of technologies in place for something that we could solve ourselves. So if it's a centralized, well, I'll talk about that a bit later. If it's a centralized business model, most of those can be solved with a database. I kind of mentioned this with Bitcoins, but avoid using digital currencies where the majority is owned by a few. It's too easy to control markets when you don't have when you have I guess not a broad number of participants in an ecosystem, right? So you look at most of the digital currencies out there, and you see ICOs and things of that nature. Most of these currencies are actually owned by a fairly small number of people, and a majority is owned by a fairly small number of people. And there's a subset of the coins that are actually available in the market that is traded. So I think from a philosophy standpoint, it's definitely to avoid that. This is the point around, we need other parties, right? So there's so much fun you can have on your own with blockchain technology, and that's why we're joining these larger organizations that have multiple parties where we could actually agree on standards, how do we interoperate, how do we work with each other, and then leverage that in order to have solutions for our customers ultimately. And the last rule is from our standpoint, is you sort of avoid replacing one centralized business model with another. You actually don't, the technology, from my point of view, doesn't really make a difference in terms of what technology you use. It's really the business model that's quite important. So if I have a centralized business model and I try to replace that with using now blockchain or DLT technology, but it's still a centralized business model, you actually don't add much value to it. You're not really leveraging the technology as well, or the opportunities that the blockchain technology provides. So I think this is quite key. So I think a lot of the failed examples or people try to use blockchain are actually falls into this bucket where they're just still trying to centralize a model and just using the same type of technologies. So I think the most exciting thing for me is the potential of the technology is really in the world of decentralization. So if you think about the world today, actually, there's very few things that are truly decentralized. Almost everything has some sort of central body or entity that controls rules of engagement, that sort of controls how the engagement works. Controls, like even if you take something like currencies, there's central banks that typically controls how much currency is available in the market. So truly exciting thing for me is the case for decentralization, right? And maybe I can give an example that people could relate to. So if you, how many people here use Uber or some sort of car service? Surprisingly small number, but okay, fine. If you do use Uber, for example, you'll have your app, and what Uber does is a centralized model. What Uber does, they pair up drivers with riders, in essence, right? And people trust Uber because they to some degree, because they have some ratings around the drivers. Drivers get ratings of passengers. You get a photo of each other. You also know that the payment's going to happen, so you're not worried about it, right? The driver's not worried; they know they'll get paid. The passenger is not actually that worried about making the payment as well, because it's probably more concerned around getting from point A to point B. So that's a centralized model. If you think about Uber being decentralized, potentially you can have a world where all the drivers would have their token, their blockchain token, and the passengers would have their blockchain token. We all trust this token. And on the token and the ledger, you can see the history of the rides I've given. And on the passenger, you can see the history of the rides I've taken, and you can see the ratings on there. And in that decentralized model, there's no need for an Uber, for example, right? So I can directly negotiate with the driver and agree on a price. So Uber takes about 20% cut on each of the rides that they give just for providing the service, the centralized service. So you could split that 10-10. I could save 10% as a passenger. The driver could get 10% more. Maybe it could be a better world in that case, right? So a lot of the models you're seeing today, almost everything is centralized. The potential of blockchain is actually to decentralize the world, and you could actually have independent entities working together without middlemen taking a cut. So that's the real exciting opportunities, I think, of blockchain. We just probably talk a bit about the benefits of this, right? So today, if you go back to the Uber model, if Uber has an outage or something happens with Uber, you're down, you're stuck, you may be not able to get a ride or to fall back to another solution. So in a decentralized world, you have far more resilience. You have no single point of failure. Everyone is sort of working independently. Cost, as I mentioned, because you don't have the middleman that you sort of have to pay a commission to, you do have an opportunity now to improve cost dynamics between and manage pricing power in terms of the community. Agility, right? So if there's a new feature that needs to be added, you can only go as fast as Uber can add a new feature, for example, right? So there are cases where, as you know, centralized body, especially the larger the centralized body is, it could take a very long time to get a feature added or a new regulation to come into play, right? So if in a decentralized world, you have far more agility, as long as, you know, people are willing to move quicker, independently to move quicker from any other centralized control. And I think, you know, especially in the world today, privacy is such a big topic, hot topic. In a decentralized world, I hold my own data. I sort of control that. It could be on my token, and I can decide who has access to it, who can see what data. And I think that's quite important, right? And you know, I think the later generations, I sort of showed you the earlier blockchain technologies and some of the more recent developments like Cordar. Privacy, GDPR compliance, a lot of that stuff is quite key to the technology, right? So the earlier public type of blockchain, once something's in the ledger, it's publicly available for everyone to see, right? And that's some of the way the consensus model works in the public blockchain. You do have problems when it comes to things like GDPR compliance because there's, for example, a right to be forgotten. Now, if I say I want you to forget about this transaction, you can't actually do that in blockchain, traditional blockchain technology. It's always there. Some of the newer variants like Cordar, for example, you can control who has access rights, who can see what data in the blockchain, right? And same thing with Hyperledger and some other the more modern blockchain technology. So privacy is quite keen there, and very important, I think, for people. That's pretty much all I have. I do have 2 minutes for questions, if there's any questions or anything that anyone has in the audience. If not, I'll introduce Peter to come up. Oh, you have a question? Oh, you're Peter. Okay, great. Welcome. Thank you.